hundreds of dollars could be coming your way soon. Because every year we sit around waiting patiently for that income statement from our employers, just so we can pay someone to copy and paste some numbers into a system. And then we can pay them a little bit more so that they can submit it on our behalf. Yup, that's right. It's tax season! Joking aside, obviously I'm pretty sure accountants do more than copy and paste, but it just kind of feels like they copy and paste, but whatever. If you're an accountant, correct me or scold me, whatever. For years, I did what most people do. I just hand in my papers, and then a few weeks later, money is just deposited into my checking account. And then I'd spend it immediately. No clue how it worked, no questions asked. Free money, am I right? Wrong. If you're watching this video, that cycle ends today, because I'm going to be breaking down how taxes are actually calculated in a way that won't make you cry, why you either get money or owe money, and what you should be doing with that refund if you get one, instead of blowing it on like impulse buys. Let's jump right in. First of all, I am not a tax nerd accountant, so what I'm going to tell you is based off of some research and some light Googling. Here's a very simple breakdown. 1, you add up all your income. Add up all the money from your job or jobs. This is what's considered your gross income. And if you don't know the difference between gross and net, here's the way I like to think about it. What you get after all the deductions from your paycheck and you catch it in the net, that's what you get. It's in the net that you caught the money in. And it's gross how much they tax you. So that's how I remember it. 2, subtract deductions. This includes retirement contributions, business expenses, tuition, anything that reduces your taxable income. And 3, apply your tax rates. Very simply put, the more you make, the higher percentage you pay. That's the tax bracket system. So take a look here. And again, this is for Canada. So take a look at this bracket system. As an example, let's say you make $150,000 a year. You would be taxed like so. 15% for that first bracket there, and then 20.5% on that next bracket, and then 26% on that next bracket. So keep in mind, it's not 26% for all that you make. It's 26% from everything from, in this example, from 114,000 to 150. And lastly, number 4, you have to factor in the credits. These are like discounts on your tax bill, like child benefits or medical expenses. And boom, just like that, you have a number. Simple, right? If not, drop a comment and I'll send you exactly what I Googled. Next up, let's talk about why you would owe or receive money. Here's the deal. If you paid too much tax, you get a refund. If you paid too little tax, you owe. It sounds pretty simple, but this is actually the part where people get confused and frustrated. Do you ever wonder why you weren't just like taxed properly in the first place? And then we could avoid this whole like rigmarole? Because that's not how the system works. Most people love getting a big tax refund, but I'm gonna kind of ruin it for you really quick. A tax refund just means that you overpaid the government all year. That is your hard-earned money that you could have used paying down your mortgage, growing in investments, or fueling your crippling gambling addiction. Instead, you just gave the government a 0% interest loan, and they're just giving it back. I don't know how people do this on their videos. They like put it on like a fork or something, and I don't know. Maybe it's not me. Ideally, your employer will get the tax withholding properly or right the first time, but they rarely do. If you owe a small amount, that's kind of a win. It means you got to use your money throughout the year instead of letting the government hold on to it. But if you owe a ton, then it's probably time to tell payroll to get their shit together. Now, what do you do if you get a fat stack for a tax refund? If you're one of the lucky ones who gets a refund every year, let's talk about how to actually use it wisely. First, you got to shift your mindset. The refund is not extra money. It was always your money. You just didn't get it when you should have. So if you got a $1,200 tax return last year, that means you were missing out on $100 per month all year long. Here's exactly what I would do with these windfalls. First, kill your debt. If you have debt, throw that refund at it like it just insulted your family. Next, if you don't have any debt, invest at least 30% of it. Compound interest is your friend. Catch up on that wealth building game. Next, I would cover upcoming bills. Heating, electricity, rent or mortgage. Put it towards stuff you know is coming. And finally, if you have a little bit left over, treat yourself. Buy something from your Amazon cart. Go watch a movie. I don't know, enjoy yourself. But remember to pay yourself first. Get rid of debt, fund investments, then enjoy yourself. This happens every single year. So start thinking of your tax refund as a reallocation of your own money, not a bonus from the government. Now, go check what your tax refund is going to be this year and drop a comment. Do you usually get a refund or do you owe like a crap ton of money? Let's have a chat in the comments below and I'll see you next week. Peace.